Hello, I'm Duane, your mortgage advisor, and here's your mortgage market update for the week of August 3rd. Last week, the Federal Reserve left its benchmark interest rate unchanged. However, keep in mind that mortgage rates are more influenced by the bond market, particularly the 10-year Treasury and mortgage-backed securities, than by the Federal Reserve's overnight lending rate. That's why we watch the bond market every day and not just the Fed's announcement. So for today, the bond market is showing signs of improvement after several weeks of rising mortgage rates. The 10-year Treasury yield has moved lower and mortgage-backed securities are improving. If this trend continues throughout the day, some lenders may offer better pricing through lower discount points, improved lender credits, or even slightly lower mortgage rates. One reason for today's improvement is lower prices following renewed diplomatic efforts in the Middle East. Lower energy prices can help reduce inflation concerns, and when inflation expectations improve, the bond market often responds positively, which can benefit mortgage rates. Now, this does not mean mortgage rates have suddenly dropped, but it is an encouraging sign after several weeks of increasing rates. So, if you're buying a home and expect to close within the next couple of weeks, today may be a good opportunity to review your lender's pricing and consider locking in your interest rate if the payment and closing costs meet your goals. Now let's take a look at what's on the economic calendar for the week. Today we'll be watching the ISM Manufacturing Index, which measures activity in the manufacturing sector. A weaker reading could help mortgage rates, but a stronger reading could do the opposite. Tuesday we'll get the JOLTS job openings report. This will give us another look at the strength of the labor market. Wednesday, we'll receive the ADP employment report with the ISM Service Index. These reports can provide clues about the overall health of the economy before Friday's jobs report. Then Thursday, we'll be watching the weekly unemployment claims. If claims rise more than expected, that could be positive for mortgage rates. And finally, Friday brings the July employment report, including non-farm payrolls and the unemployment rate. This is expected to be the biggest market-moving event of the week and could have the greatest impact on mortgage rates. I'll be watching each of these reports throughout the week and will provide updates if we see any meaningful changes in the mortgage market. I'm Duane with Home Loans with Duane. Thanks for watching, and I'll see you in the next mortgage market update. You have a great week.